You're watching BCTV. We're all about Branford. You're watching BCTV, Branford Government Television, a service of Branford Community Television. This program is brought to you in part through the support of the town of Branford.
We're going to start the meeting for the Town of Branford Board of Finance, regular meeting for August 27th, 2018. First on the agenda is to approve minutes from the June 25th, 2018 meeting.
I'll move it.
I'll second, Joe.
Been moved and seconded by Jeff. Discussion? All in favor?
Aye.
Thank you. Second on the agenda is citizens' comments. If there's anyone in the audience who'd like to make a comment with regards to the agenda, they're welcome to do that now. With no takers, we'll go to item number 3, to hear a presentation from the GYL Financial Synergies and Hightower Advisors with regards to the performance of the town's volunteer fire pension fund for the quarter ended June 30th, 2018. You'll also hear that's similar report with regards to the police pension fund, as well as the town's other post-employment benefits fund. Welcome, Michael and Robert.
Robert?
Good evening. As customarily do, I'll cover the economic and market landscape, and Michael will cover the experience of the fund. So as we're reporting for the quarter ending June 30, 2018, we've had quite an interesting first half of the year in the U.S. equity markets and also the global equity markets. We've seen that the U.S. equity markets did have positive returns in the second quarter, while the international and the foreign markets had negative returns, where the U.S. market was up by if you look at the S&P 500, it was up about 3.5% for the second quarter, while the developed international markets were down about 1.25%. So quite a bit of volatility as we've continued through that second quarter. And when we look at that for those two quarters, for Q1 and Q2 combined, it continues to be, a slightly positive market. As we roll this forward over the next 2 months, we've had quite a pickup in the U.S. equity markets through the summer. So we've seen that brings the S&P 500 to all-time highs as of today's close, up over 9% year to date, while international markets are still lagging slightly negative. We are seeing that smaller U.S. companies are behaving better than large as far as the stock performance. So we're seeing some excess returns in that part of the marketplace. That's being led obviously by the fact that corporate profits continue to do well. We're seeing corporate balance sheets that are in very good shape, and that's creating the expansion in the U.S. equity markets. We're seeing in Europe and Asia and the other developed economies, they're still fighting with a number of economic stimulus packages that are still trying to take hold to stimulate those economies to create growth. And the emerging markets, and specifically Brazil and China, have really been struggling this year as a result of a very strong U.S. dollar. So we're starting to see some of the effects of the tax plan start to flow through the corporate profits and bottom lines, and we expect to see more of that take hold and show as we see the third quarter results. Unemployment continues to be at a level that the Federal Reserve considers at or around full employment, which is 4% or just south of 4%. And inflation, the consumer price index that they track in the PCE, is pushing that 2% number, which is their target for inflation, which has led the Federal Reserve to continue their path of gradually raising interest rates very deliberately. As we saw in the June meeting, they raised interest rates again another quarter of a point to bring the federal funds rate to 2%. The expectation in the marketplace is that we see those short-term interest rates continue to gradually rise, with another interest rate hike expected in September and another one potentially in December. And the markets are pricing in the expectation that further in 2019, which is quite a ways off still, their markets are pricing in the expectation of 2 additional rate hikes. That would bring the Fed funds rate from the current 2% number to 3% a year from now if that were to transpire. At the same time, what's interesting though is that the overall bond market has been demonstrating an expectation that growth is not going to be extraordinary in the years ahead, and that we're currently in a very, bumped environment of growth. And you see that by how the 10-year Treasury yield has come down a little bit over the last few months. And the 10-year Treasury yield's at about 2.84. So that yield curve has continued, as you recall from prior meetings, the yield curve has continued to flatten, which means the difference between the 2-year and the 10-year Treasury has become much less. So currently that's about 20 basis points, and a year ago that was about 80 basis points. So that's just an indicator of slower growth, and it's also being strongly influenced by a lot of demand for fixed income instruments, which is keeping those rates low. So overall, for the second quarter, we did see positive equity markets at the U.S. equity environment, negative returns in the international equity components, and fixed income environment was fairly flat because of those short-term rising rates. So with that, I'll let Michael take over and go through the behavior of the fund, the various pieces from the police, the fire, and then the OPEB. And then from there, we'll also segue to what we want to do with the recent contributions that came in.
Thanks, Rob.
Great, thank you all. If everyone would please turn to the performance book for the police pension, page 18. First, we'll review the experience at a high level and look at some of the risk statistics as well. Starting on the top right, you can see number of periods 183. So we're just past that. Those are months. So we're just past the 15-year mark as far as data here. Annualized return, you can see for the pension plan, a few rows below that is at 5.72%, spot on with the investment policy, which is also at 5.72%, exactly what we would expect from a predominantly passive portfolio. So of course the total return for that time period at 133.5%, again right on target with the policy. If we look down a few rows, however, you'll notice the beta or the volatility of the portfolio versus the market is at 0.9. So although the return has been equal to that of the benchmark, it's come with about 10% less volatility than the benchmark. That's also evidence a few rows below where you see standard deviation, which is just really just a fancy term for risk, and that has also been just under 10% less than that of the benchmark. So all that translates to a slightly positive risk-adjusted return, or alpha, of 0.04. So that's kind of like the overall picture, so the portfolio continues to perform consistent with expectations, albeit with somewhat less volatility than that of its benchmark. In dollars and cents, you can see at the bottom right of page 18 what that translates to. Beginning market value in April of 2003 of $8.31 million. Ignore contributions and withdrawals because that includes movement of money between the accounts. And we'll focus in on the net cash flow, net contributions ahead of withdrawals of about $1.32 million, and then earnings of just over $14 million, bringing us to the value at the end of the second quarter of $23,677,000. Since the end of the quarter, as Rob alluded to, the markets have continued to move in a positive direction, and the portfolio has closed Friday at just under $25 million, $24,997,000. There was a contribution of $975,000, and then earnings of approximately $342,000 since the end of the quarter. So turning back to page 15, we'll look at the performance. At the top line in blue, return for the quarter was 0.7%, lagging behind the benchmark a little bit, which had a return of 1.2%. That's really, as we've discussed in the past, an artifact of the passive index funds that the plan owns. They trade ex-dividend on the last day of the quarter, and then pay the dividend on the first day of the subsequent quarter. So it has the impact of sort of artificially suppressing the performance a little bit, even though immediately following the change of the quarter into July, there was a cash influx from the dividend, and so that would ultimately comes out in the wash, essentially. For the trailing 1 year, return of 3.66%. Again, a little bit behind the benchmarks, return 4.43%. Equities lagged a little bit, returning 9.65 versus, or excuse me, 8.65 versus 9.23%. That owing primarily to a little bit of underperformance from the international, particularly the emerging market index fund. There can be a little bit of what's called tracking error, and in the short run, and there was a little bit of an experience of that in the international space during the most recent year. Fixed income has been performing consistent with expectations. Mesero has shortened the duration of the portfolio slightly. They also have, they're a little overweight in cash. They're being very selective about deploying cash as bonds are maturing into a rising rate environment, really looking for opportunities in the fixed income market. They're underweight in corporate bonds right now. They feel they're relatively expensive, and that served them well during the first half of this year. So all in all, performance, again, consistent with underlying expectations. We see a little bit of slippage for the quarter as a function of the dividend policy of the exchange-traded funds. With that, as I had mentioned, there was a contribution of $975,000 that came in on the 18th of July. We had a discussion with the finance director last week regarding rebalancing the portfolio, and I think Rob is going to touch on that for a moment, as we are going to be recommending investing those dollars and rebalancing the portfolio.
So
Sure.
before I,
Question?
On the beta factor,
Yes.
if the beta was something like 1.3, which means a lot of emotion going on, well, what does that tell you?
Well, if the beta was the beta is versus your policy. So your policy will be 1 by definition. So if it was 1.3 and you had 30% more volatility than the underlying
Well,
policy.
is that a good thing or a bad thing?
Well, especially since you're passively invested, I would suggest that that's probably not the optimal. It's not high volatility and low volatility. It's not that one's good and one's bad. It's just really ultimately the type of investor that you are. But given that the kind of the long-term desire of the Board of Finance is to err on the side of being a little more conservative, and as we have been very methodical.
All right, so all of our betas should be below 1.
Well, in the long run, they should converge towards 1 if you're always fully invested with the index. The primary reason that it's been below 1 is because we tend to be very deliberative as far as investing cash, and tend not to do it into rising markets. We look for opportunities to deploy cash, and that's helped to keep the volatility somewhat muted historically.
Thanks.
any other questions before I jump into the rebalance recommendation for the police pension?
I think we're good. You just had a handout from the gym with regards to the rebalancing. You want to run through that for us, Rob?
So, quite simply, we recently had a contribution come into the plan, and we're looking to rebalance the cash level down from almost 5% to bring it down to 3%. And in doing that, those cash dollars would be deployed predominantly into the fixed income component of the portfolio and then the international equity component of the portfolio. You'll see a little bit of noise on the page as far as small buys and sells. Those won't be occurring, but just deliberately adding money to fixed income from cash, and then adding some dollars towards international equities, which is the part of the global market that's been underperforming as of late. We think it's a good opportunity to add exposure there to bring it towards our policy limits, and not really take any money, add money. We don't want to look at adding money to U.S. equities at this point in time.
Okay, questions on the rebalancing?
So what's our current policy? 50,
55%
55, and,
equities, and then 35% fixed income,
okay.
7.5% high yield fixed income, and then 2.5% cash, But in our conversations with the finance director, we'd like to try to keep that cash level closer to 3% to match off to a specific period of time of liabilities.
Right, so that's the one just minor adjustment from the meeting we had. The three of us met to talk about it. They presented this rebalancing, and if you see the page which talks about the police rebalancing of 624, 924, I believe that number is going to be 750 roughly when we're all said and done, because we wanted to keep more in cash based on our current cash flow needs and officers retiring.
So the 624 will be 750.
Right.
Perfect.
Yeah.
Okay. All right, with that, somebody want to make a motion to approve this?
Move it. I'll second.
Moved and seconded, discussion. All in favor?
Aye.
Next.
Now we're going to transition over to the fire plan. And so if we go into that next booklet for the fire pension.
And again, let's start by looking at page 18. The fire pension, of course, was split from the combined pension about 2.5 years ago on 12/1/15. So the history's quite a bit shorter than it is for the police pension. But since that time, the return has been 6.13%. Again, the volatility quotient about 10% less than that of the benchmark at 0.9. And again, a slightly positive alpha of 2 basis points. In dollars and cents, you can see that cash flows, which have been a combination of the transition, that number's a little bit skewed because of the transition, but you can see about $820,000 there and about just under $136,000 in earnings. Since the end of the quarter, there was an $87,000 contribution received and another $20,000 in earnings, bringing the value at the end of last week at $1,117,000. Similar experience on page 15 to that of the police pension. You can see in the blue line at the top, the return for the quarter was 67 basis points. Again, lagging the benchmark a bit, which returned 1.2%. The primary driver of that was underperformance in the equity sleeves, really owing primarily to, as I mentioned, dividend policy of the index funds. The fixed income performed really spot on with the benchmark. Recall that this portfolio, because of its size, is invested in a Vanguard bond index as opposed to the customized portfolio managed for the pension that the police pension has. And then the high yield portfolio returning approximately 31 basis points for the quarter. Similar to the police pension, there's an excess of cash due to that contribution. As of August 23rd, there was approximately $103,000 in cash, which represents 9.3% of the portfolio. This one we are recommending just rebalancing back to policy, except as similar to the police, as Rob had mentioned, some of those smaller trades in the equities. It's not necessary to do those, but ultimately will bring us back to policy and get that cash down to the target level of 2.5%.
And following similar to the police pension, the majority of those dollars being invested are going into the fixed income component and in the equity piece into the international equities.
Questions on this?
Good job.
Somebody want to move it?
I'll move it.
Second.
Moved and seconded, discussion. All in favor?
Aye.
And now moving on to the third fund, which is the OPEB trust. And Michael, we're going to go to the same page, 18.
Page 18, please. The OPEB trust, you can see the inception date on the bottom right was July 1st of 2011. Since that time, performance has annualized at 5.52%, right on target with the benchmark, which was at 5.49%, yielding a total return of just north of 45.5%. And again, that has come with significantly less volatility, about 25% less volatility than the benchmark is defined by the portfolio beta. That translates to a positive risk-adjusted return, or alpha, of 11 basis points. In dollars and cents, at the bottom right of page 18, you can see beginning value on July 1st of 2011, just over $4,030,000. Since that time, about $7.714 million in net contributions. There are no regular outflows from this portfolio, and in investment earnings of $3,520,000, bringing us to the $15,264,000 at the end of June. Since the end of June, there was a contribution received in the amount of $795,000 and approximately $402,000 in earnings, bringing the value as of Friday to $16,461,000. Turning back to page 15, again, really it's with a similar investment lineup to the other plans, a similar experience from a performance point of view. 1.26% was the return for the quarter. Again, the equity group lagged a bit, returning 2.12% versus 2.99, or roughly 3% for the benchmark. That is, as I mentioned with the others, that's an artifact of the dividend policy of the iShares. And then the fixed income portfolio performed really spot on with the benchmark, returning 20 basis points for the quarter. As I mentioned, when I was talking about the police pension, this is also managed by Mesro, so those adjustments that they've made to the portfolio in anticipation of rising rates and being able to take advantage of those. Similar story with the OPEB. And of course, as you are deploying dollars to fixed income with both the pensions and, as we'll be recommending momentarily, with the OPEB, you'll have the opportunity to buy into the rates that have risen thus far this year. So with that, we are also going to be recommending a rebalance of assets for the OPEB. As of Friday, the cash stood at $1,105,000. That's 6.7% of the portfolio, versus the target policy of 2%. So we have a total of about $775,000 to invest in cash. Similarly to the pensions, the majority of that will go into international equities as well as fixed income, about $370,000 into fixed income, and approximately $310,000 into international equities. And much like the others, we'll hold back from doing those small trades in the domestic equity.
Okay, questions on the rebalancing or the OPEB fund in general?
I'll move it.
Moved by Robert,
Second.
second by Lorraine. Discussion? All in favor?
Aye.
Okay, gentlemen.
Great.
All set.
Thank you all very much.
Thank you very much.
Take care. Next is to consider and if appropriate, approve a request from the Board of Police Commissioners for the following transfer for fiscal 2018 from SIC, $12,378, from Communications, $541, also from Safety Supplies, $1,458, for a subtotal of $14,377, and going into accumulated SIC, $12,378, Radio Communications, $541, and equipment, $1458, for a total of $14,377. Chief?
Good evening.
Good
I'd like
evening.
to introduce John Mulhern, our new Deputy Chief.
Welcome.
Good evening, John.
Good luck, welcome.
Hey, so I forgot my sheet. Hang on one second. So the first transfer is from sick to accumulated sick. This has to do with a resignation, and collective bargaining requires us to pay out sick time. Excuse me. So the second is from communications to radio communications. This is because of a discrepancy in a purchase order. And the third is for equipment, 1458 from safety supplies, or safety equipment, to equipment to be munis. I don't know what's the matter with me.
Want me to,
I'm not feeling very well.
you all right?
Excuse me, yes. To be munis compliant. It was for a ultrasonic gun cleaner.
Questions on the chief's request and commission's request?
Yeah.
I'll move it.
It's been moved,
Second.
seconded. I'd like to just hold you for a few more minutes.
Sure.
No.
No, I'm good.
Discussion?
I
Any
apologize.
discussion? All in favor?
Aye.
Okay, chief, I think we're good.
Okay,
I appreciate you coming.
thank you.
Welcome.
Thank you.
Okay, thank you. Okay, next, item number 7 is to consider and if appropriate, approve a request from the Senior Center Director for the following budget transfer for fiscal 18 from office supplies 1246 into equipment 1246 and from purchase services and repairs 3,000 into furniture and fixtures 3,000. Welcome, Dagmar.
Hi, guys.
How are you?
Lorraine. These again are also to be munis compliant, so items are taken out of the right account. The first one, we purchased 3 iPads and 1 Samsung Chromebook for staff use and also training of participants. And finance felt it needed, instead of coming out of office supplies, we needed to create a new 101 for equipment. So that's what that is. And on the second one, we've been on a pattern of replacing. We have tables, if you've been in Canupac lately, some of our tables are like 30 years old, extremely heavy and breaking. So we've been replacing them. So we purchased 5 new replacement activity tables, and also my staff, we needed 5 office task chairs because they were falling apart. So in order to be compliant, instead of out of purchase services and repairs, we would like to transfer it into furniture and fixtures.
So these were contemplated previously, it's just that the way
Yes.
the accounts are disciplined by Catherine, the
Yeah.
assistant
She's
financial
the first
director.
line of defense.
Right, that's right.
Yes.
Got it.
Well, we want to be
Yeah, no, it makes
accurate in
sense.
what account it's coming out of, the
Little by
money's
little, we're
there.
cleaning it up, I got it.
Correct.
Questions from Dagmar?
I'll move it, Joe.
Been moved,
Second?
seconded discussion, all in favor?
Aye.
Thanks, Dag.
Thank you.
Next is to consider and approve, if appropriate, a request from ERAC Branford Adult Ed for the following budget transfers. From equipment, 2618, into salaries, non-certified, 2580, into benefits, $38. Also from purchase services, 2577. And from advertising and printing, I assume, and from equipment, for a subtotal of 8577, into salaries, non-certified, 6975, benefits, 102, office supplies, 500, and memberships and conferences, 1,000.
Yeah, I'll actually address these. I just want to point out 2 things. One is 1718 for the minutes. The other is an 1819. And while there's various items that are being moved, the 2 primary large items is the salaries non-certified, the 2580. And then if you look into the 1819, you see salaries non-certified of almost $7,000, and then a corresponding small amount for benefits. They basically hired a new person to run the enrichment program, and that person previously was working as a contractor, but now that person's an employee, and they are non-certified. So they will then be paid out of a salaries non-certified account. So again, this is part of that as well. making sure that, you know, the items are hitting the right account. And, you know, so when you make that adjustment in 17, 18, it would make sense not to wait till August of 2019. So the thought was to make that fix it, and then whatever other changes they wanted to make, because you have new folks there, so.
Thanks, Jim. Questions, Charlie?
Hey, Jim, what does the enrichment director do?
Well, the enrichment is, for example, the different courses that they offer. So let's say, for argument's sake, there's like two parts of adult ed. There's one basically where you get your high school, my understanding is you get your like high school equivalent. Okay, so if I didn't finish high school but they wanted to get a high school equivalent, that's what adult education would do. There's another piece of it which I would say probably has more of a recreational component. So like, for example, in a town in North Haven and Hamden and Branford does something similar, you'll get things in the mail to take adult education. And, you know, it might be something like, you know, how to, you know, for drawing, or it might be something about, you know, personal finance. It may be something about, you know, area lighthouses. And again, these are not necessarily courses we offer, but that's what's considered enrichment. You know, you're not getting a
I
high
get
school
that part.
equivalent degree. So.
Who would they report to?
Well, basically, ultimately, the folks at the Board of Ed, you know, report to the superintendent. You know, some of these programs that relate to budget, you know, there's sort of an intern step in a central office. So, for example, you know, when they're getting approval for a purchase, that would go through the business office. But in terms of the overall direction of the program, they ultimately report to the superintendent, which is why you've seen in past years during budget presentations, the superintendent and the folks from the enrichment are here.
Okay. Thank you.
Jim, just one other question. So the 2580, that's 17-18 fiscal year,
Yes.
and then I see down below, is that 19 non-certified, 6975? Is that 19?
That's fiscal.
Fiscal year
That's
19, yes.
Okay, so did we not budget?
Well, basically, the budget's being adjusted based on who's there now and what their certifications are. And then ultimately, at one time, I think that person was also working as a contractor. So the prior director was a certified position. So all the salaries were charged to a salary certified. Now you have a non-certified person running the program.
Got it.
So we wouldn't charge it to a certified
Got it.
salary line.
Got it. Thank you.
Okay. Any other questions?
I'll move it, Joe.
Moved.
Seconded.
Howard, seconded by Jeff. Discussion? All in favor?
Aye.
Okay, next is to consider and if appropriate approve a request from the tax collector for the following budget transfer from postage, $1,330, at the tax bill processing, $1,330. Welcome, Roberta.
Hello, how are you?
Good, thanks.
Good. This is really just a simple, straightforward request. We receive an estimate for the tax bill processing from our processing partner, QDS, Quality Data Services. They send us an estimate every year, and then it just fell short of the actual. So we're just requesting this money to be moved over.
So this is for fiscal 18,
Yes, sir.
and it's within the budget.
Yes.
Any questions from Roberta?
What was the estimate?
I think the estimate, and I apologize, I should have written that down. I think it was 13.5 or 13.9. Jim, do you have?
Yeah, it was, very close. It was 12.9.
12.9.
Yep.
Okay, other questions?
I'll move it, Joe.
Moved by Jeff, seconded by
Lorraine?
Lorraine. Okay. Discussion?
No discussion, thank you.
Okay, all in favor?
Aye.
Aye. Thanks, you're all set?
Yes, thanks.
Take care.
Have a good night, everybody.
Okay, you too.
Thank you.
Next is to consider request of Blackstone Memorial Library Board of Trustees to appoint an ex officio member of the Board of Finance to sit on the library board. We've got a letter here. I've asked Jeff Follett if he'd be willing to do this, and he has agreed. So if you folks are okay with that?
Excellent candidate.
Thanks, Charlie.
Charlie, do you want to make that motion?
Sure, I'll make the motion that Jeff Willett be our representative to the Board of the Board of Trustees for Blackstone Library.
Very good.
Second.
Second by Robert. Discussion? All in favor?
Aye.
Thank you, Jeff. Next is to consider, and if appropriate, approve a request from the Board of Fire Commissioners for the following 2018 budget transfers. So bear with me. From utility personnel, from regular wages and salaries, $48,000. Utility personnel, $27,23. Medic, $22,000. Overtime, public events, $13,500. Vacation, $2,000. Holiday pay, $16,000. Special detail, $1,000. Volunteer officer stipend, $22.40. Stipends, $12,300. Professional development, $2,000. Ambulance billing, $8,900. Employment testing, $15,497. Fire prevention investigations, $2,118. Other fuel, $3,500. Hydrants, $48,000. Purchase services, $8,903. Building rental, $1,000. Communications, $6,000. Postage, $400. Safety supplies, $662. Other supplies, $2,400. Equipment replacement, $1,800. Volunteer equipment, $378. CMed, $460. Contingency, $39,425, for a subtotal of $261,206. And that's being transferred into Assistant Chief, Fire Marshal, $2,400, overtime, $156,223, sick, $78,325, stewards, $378, educational incentive, $7,651, uniforms, $2,118, medical supplies, $83,06, furnitures and fixtures, $662, miscellaneous volunteer fire expenses, $2,240, and transfer to Fund 203, which is $229,03, for a total of $261,206. With that said, welcome, Chief and
Sorry to make you
Commissioner.
read so much tonight, Mr. Chairman. The primary drivers are overtime and sick account. I had been warning for a couple of years that we have been facing some retirements. We've experienced those retirements, and it takes us a little while to get replacements fully up-trained and in the door, as well as the older workforce that is getting close to retirement. When they use their sick time for long-term injury or surgery. Unfortunately, we have 2 members that were out on long-term sick this year. Primarily throughout the year, we had at least 4 vacancies at any given time, which is quite a bit more than our budget is designed to really handle. We did try to put some cost control measures in place, and but as you know, if we cut, we're a 1-for-1 replacement in the contract. So if somebody's off, we replace them. And the other thing is, the call volume is the driver of the ambulance service that we provide. We had a record year last year. We did 6,261 calls over the fiscal year. And as the public is calling for an ambulance and we provide that ambulance, we then bill for it. So we did overspend some of these accounts. They're all related in one way or other to the hiring process or the, these people that were out. And the good news is on the revenue side, we exceeded our target by $245,000.
Thanks, Chief and Commissioner. Questions from the board? Charlie?
Hydrants, Tom, 48,000. Was that an overestimate?
That was an overestimate. Remember a couple of years ago, we had reached out to the water company to try to get an estimate, and they gave us their best that they were going before the DPU C4.
Yeah.
We budgeted off that number, and it just hasn't come to fruition, which I guess is, good news for us tonight, but we did overestimate that. We left it flat this year in anticipation that they will eventually get that increase that they had anticipated.
How about the ambulance billing? Is that an overestimated amount too?
I don't think so. I don't budget that, but I think it's based on the estimates for revenue.
Okay, because I thought you have process where you ask them what they think it's going to be?
We do. So we budget based on that number, and then the revenue is based on a percentage.
Okay.
Okay, other questions?
Yeah, just a comment on the hydrants. Over the last several years, we've seen swings from, 13% increase to a 22% increase. So we've been fortunate in the last 2 years that we haven't been hit by that. So we'll take that 48.
Thanks, Bud.
And I wish I had a better way of estimating it. We do reach out to our customer service representatives, and they give us their best answer on
It's a
that.
new company now, too, right?
I haven't had any experience with the new company, the RWA, so.
I mean, I was talking about quick med claims.
Oh, yeah, well, that's been holding good. I mean, we're good with the ambulance billing.
Jim, can you let me know what the contingency balance is for fiscal 18 as well as 19?
Sure. I'll start with fiscal 18. With the items that you have on your agenda tonight, there's the fire, as my records show, at 39,425, cable TV of 250, and law 177. That will leave a balance of 459,421.
Yep. And what about 19?
And then,
Is there anything coming out of?
yes, for 18-19, we had put money into contingency for the SAFER grant, or staffing to augment the
Right.
fire department, and we're waiting to see if we would get the grant. The request is $279,360. So starting with a beginning balance of $1,274,216, you'd end up with a balance of $994,856.
Okay, thanks. Charlie?
Hey, Tom, I have one more. On CMed, is that based on our income?
No, CMed is pretty much a flat fee.
Yeah, I thought it was, and I just wondered why, there's a,
Pretty sure that the,
Yeah, it's a per capita mix with a flat fee. It's a lot less now that it's Valley Shore. 3 years ago, 4 years ago, Selectman Cosgrove negotiated a deal with Valley Shore when we left CMed New Haven, when we were paying $35,000 a year, and it's down in the area of about 12.
okay, so this is just an excess? Okay.
Sometimes there's a radio stipend if they have a hardware issue and things like that.
Okay, other questions?
I'll move it, Joe.
I'll second it.
Moved by Robert, seconded by Jeff. Additional discussion? All in favor?
Aye.
Okay, next, number 12 is to consider and if appropriate approve a request from the fire chief for the following transfer to fulfill the town's obligation pursuant to the Staffing for Adequate Fire and Emergency Response, a SAFER grant. Follow-up from our March and April meetings. The request is from contingency for fiscal 19, $279,630. Into regular wages and salaries, $205,380. Vacation, $19,300. Sick pay, $12,850. Holiday, $16,100. Stipends, $20,000. Uniforms and clothing, $6,000, for a total of $279,630. First, I'd like to congratulate you and the town on the grant award. And so if you want to maybe jump into that first and explain what we were awarded, Chief,
absolutely.
and then we can get into the specific transfer.
Thank you. So we were awarded a federal grant known as the SAFER grant, which stands for Staffing for Adequate Fire and Emergency Response. It is a competitive grant. It's thousands of fire departments across the country apply for the grant. You basically have to make your case that if you're giving the staffing that the grant provides for, that you will maintain the staffing, but most importantly, it will bring you up to the standard or closer to the standard that they are trying to meet, which is the National Fire Protection Association Standard 1720. It essentially is how many firefighters can assemble on the fire ground in the proper number in the proper amount of time. So for us, that would be 9 minutes, and it would be 15 firefighters. So when we look at our history and our ability to do that, we weren't typically meeting that standard. As a matter of fact, we were almost never meeting that standard. With the addition of the 2 firefighters, it'll bring us up closer to the almost always, which is what they look for. And I know those are kind of general terms, but there's a lot of backup paperwork and reports that I have to run through our system to get those numbers. So the federal share to hire 8 firefighters, which was the request, and to back up to where we began, the process for increasing staffing in the fire department really was started back in the late 2000s. Our last manpower increase was 2005. Since then, our call volume's gone up well over 1,400 calls. We addressed, the chief at the time addressed the issue. The board increased our overtime accounts, and we were staffing via overtime. And it certainly helped. It augmented some of the staffing, but it again was only meeting part of the problem, which is we were passing a lot of our calls to other towns. So you can actually see it in the revenue numbers where we actually didn't hit our revenue numbers. Since we took the steps to then implement the 3-year part-time staffing plan, which we did the first 2 years of, and then realized that to get to the 3rd year, which is the most expensive year, that would give us 24-hour coverage and then some, it was really going to be, while part-timers are cost-effective, it was really going to be difficult to manage so many part-timers, and it would cost us almost as much as the full-timers. So with that being said, we approached the board in March and April to talk about the overall staffing of the fire department. I'm sure you remember it was over a 2-night period. We presented the need for manpower, how that manpower is deployed, what the standard is, and it's certainly not, and it's important for the public to know that it's not just fires. We've worked very hard to put ourselves out of business. Fires are down, but when they happen, you still need to assemble the right amount of people quickly as possible to keep that fire from spreading, especially in a town like Branford where the buildings are so close together in quite a few areas of town. But it's also the medical emergencies. It's the ability for us to address that next critical medical call, and our EMS call volume has really risen pretty high, as you know. So with that, we came to the board with the plan to put 8 more firefighters, hire 8 more firefighters, which would be 2 firefighters per shift. Those firefighters would be, we would be able to be in another firefighting unit that could also augment the medical calls, but be available in town as opposed to transporting out of town like so many of our firefighters do. We send more than half our firefighting force out of town for a pretty good part of the day. And so we presented the plan to at least allow us to apply for the SAFER grant, and in the board's wisdom, which I certainly agreed with, didn't make sense to apply for the SAFER grant in previous years if you couldn't get your head around the fact that we needed these personnel. And I think that, you know, based on you allowing us to apply, you hopefully agree with the need. We were awarded the SAFER grant, which is a fantastic thing for the town. If we're going to hire 8 new firefighters, it's nice that we were able to have some help with that. So the federal share of hiring the 8 firefighters is spread over 3 years. It's a total of $1,464,623. The federal share for the first 2 years is 75%. The town would be on the hook for 25% of that. And then in the 3rd year, it goes 35 federal government, 65 the town. Because we're aiming to target this in a mid-fiscal year, we're able to spread the impact to the town budget over a 4-year period as opposed to the 3-year period of the grant. So what we're asking for tonight is $279,630, which is the total cost of putting these firefighters on with a January 1st start date. The federal government would then reimburse that at 75%. So we're increasing our budget from contingency with that amount, but then once we start reporting to the federal government, they'll reimburse that amount for 75%. And that number is the actual cost of the town for this 6-month period would be $69,907.50.
Okay, thanks, Chief. Questions from the chief? Charlie?
Hey, Tom, the funding you said the first year is 75-25, third year I call was 35-65. What's the second year?
Same, 75-25.
Oh, it is, okay. So
Yep.
also, too, you know, at the time that you were approved to go ahead, I don't recall you mentioning that you were going to have 2 of them retiring, which you mentioned earlier tonight. So is that new, these 2 retiring?
No, the 2 retirement are kind of the normal course of what's going on in the fire department currently. So coming into this fiscal year, we had 2 long-serving members retire, I think 28 years and 30 years. They retired this year, which created 2 vacancies. We've hired for those vacancies already, and those, all but, we also had somebody resign and go to another department. So currently have 3 vacancies, 2 of them are filled, they're at the fire academy, and we're anticipating filling the 3rd existing vacancy, along with the ones that we would hire through the federal grant.
Okay, what do you anticipate in order to have all 5 new fellows on board?
When?
When do you think?
So we would bring these guys on in the beginning of the year. They would then possibly go to the fire academy. So one of the things we're looking at right now is we've been the victim of people leaving the town of Branford and going to other towns for better opportunity or what they perceive to be better opportunity and benefits. Well, now Branford is in a pretty good spot where we still have good firefighter benefits. We have other firefighters who are share in the same pension program we're in, but they're working for jobs whose cities haven't managed their money as well as we have, and they're actually looking to maybe leave there and come here. So we know these as laterals, right? So if we hire a lateral transfer, somebody who's already a certified paramedic, they're already a certified firefighter, they meet all our standards, which we would still vet them for, physical, psychological, fitness for duty, all these things. But the cost difference between, it actually would cost us more to send someone to the fire academy than it would be to hire laterals. So we're targeting at least 4 of the 8 to be laterals, and we hope to be able to bring some of these on even a little bit earlier to stop the bleeding from the vacancies from retirement.
What's the estimated cost for the fire academy for an untrained?
Academy is about $8,200 for the cost of the actual academy, and then some reimbursement costs that they get for food and mileage.
Okay.
The one thing about the new hires, though, as opposed to right now, we have a vacancy. Those firefighters are at the academy being trained. We're paying them at the 70% rate, but we're also paying the replacement costs while they're at the fire academy. These new positions, we won't actually include them until they are ready to go here. So there's no overtime or replacement costs for those people, as opposed to the current vacancies because of the minimum staffing.
Gotcha.
That's great, thanks.
Thanks. Bob, you had a question?
Yeah, just so on that same note, so we hire a lateral, and they come in at the 70% also?
Actually, the laterals won't. The laterals will come in at 90% for 6 months. And that's we calculated the difference between sending a firefighter to the fire academy. The cost to the town would be $8,200, give or take. And the difference between not hiring somebody at 70% and hiring them at 90% actually only cost us $72.99. So it is more cost effective to bring them on. Plus, we're getting the benefit of putting these people right to work without a lot of ramp up. Because when we send real new green people to the fire academy, it still takes a while for them to really get to know the job, the town, and the added thing in Branford is you have to be a paramedic.
Okay, any other questions?
I had a couple
Jeff?
of questions, Joe.
Sure.
So the hiring expenses aren't in this $279,000, so we're going to see the training or the academy expenses are coming somewhere else in your budget, correct?
Yes, so the academy expenses are going to come from, we anticipated the possibility of getting the grant.
Correct, so we
And with
beefed that
that
up.
being said, we have already limited, we did a lot of training last year. We put a good amount of effort into training because we hadn't been doing a lot of it. And so this year, I've already pretty much notified everybody that other than mandatory training, we're not doing anything. So the educational incentive, which is the money that we would typically pay overtime to firefighters to go to training or to cover firefighters, we would then utilize that to cover the cost of the fire academy. And since we don't have to replace the 8
Correct,
positions,
right, I understand
we
that.
would do that.
So we shouldn't have to see a transfer for that in the future.
We would hope not,
Okay. So the new hires are going to be firefighter paramedics,
yes,
including the laterals?
including especially the laterals.
Yeah.
Okay.
Those are the only ones we would consider,
And the 2 we hired are paramedics also?
yes.
Very good, thank you.
All set, Jeff?
I'm good.
Other questions? Charlie?
Just here again, all the laterals you think will be paramedics?
We will only consider laterals who are already certified firefighters and
right?
paramedics. It doesn't make sense for us to do otherwise.
They need to be
That's what we
turnkey.
do.
Okay. Okay.
Okay,
I'll move it.
I'll second it.
motion's been made and seconded. Thank you. Additional discussion or questions?
Question, if I may. At the end of the 3 years, when the training's over, you have to adjust your budget sheet for the 8 new hires?
We would do that incrementally, yeah. We would begin to take that up in what would be the 4th year.
Next year, you take 25% of it, and then
Right,
You add the
our
25.
cost share will be added 25%, 25%, 65%, and then the 4th year would be 100%.
But it'll stagger a little differently because it's spread out over 4 budget years because of a half-year start. So, in year 2 and 3 of the grant, it splits a fiscal year. So part of the year is covered at the 25% cost share, the other part of the year is covered at the 65% cost share. So it'll be more incremental steps.
Okay, all in favor?
Aye.
Okay. Very good. Thank you.
Thank you very much.
Good luck.
I know I put you through a lot this year.
That's all right.
Great job.
All right, next is to consider and if appropriate approve a request from the finance director for following budget transfers for fiscal 18. Cable TV from contingency $250 to subcontracting $250. From public public works, from regular wages 18,000. Is this different?
No.
No,
Extras.
no, I don't know if people didn't print it out, I just brought hard copies still.
18,325 into accumulated sick, 18,325. Human resources, wages and from wages and salaries, 38,515. Into seasonal and part-time, 38,200, and overtime, $315. Next is tax appeals and other legal. From contingency, $177,000. From expenses and claims, $13,000 for a subtotal of $190,000. Into legal expense of $168,000. Tax appeals, $22,000 for the 100 to balance out the $190,000. Debt service from payment of interest on bonds, $228,500. Into interest general purpose, $75,050, interest for schools, $140,050, and interest for sewers, $13,400. And for the finance and Board of Finance, from overtime, $1,000, from memberships and conferences, $1,000, from office supplies, $2,000, from audit, $2,830, subtotal of $6,830. Into actuarial service, Board of Finance, $59.80, advertising, $150, equipment lease, $50, and equipment, $650. Jim, you're going to go over these briefly with us?
Yes. I caught the operative reference to briefly there, so I will do that. The first item, cable TV, if you're watching this, it's because we're actually paying cable TV to a subcontracting line, which is our camera operator, and it's really driven by the number of broadcast meetings that are broadcast. So that is the $250 to subcontracting. The Public Works, we had an individual who retired last year, one of our mechanics retired, and pursuant to the union contract, they get a payout of unused sick time, and the transfer basically fulfills that obligation. Human Resources, the budget that was adopted contemplated that the department would be fully staffed at the start of the fiscal year. However, the director and assistant director are currently unfilled. At Jamie's request, Joyce Forty, our previous director, was staying on in a part-time capacity. And so, similar to the adult ed transfer of charging it to the right salary account, those would get charged to a seasonal and part-time account. And then there was also a small amount for overtime related to additional hours in a tax office. The tax appeals and the legal, I've said this many times, but it probably bears some repeating, that the legal costs are primarily response-driven, and the tax appeals are essentially there for the revaluation of 14, which is fiscal year 16. We have only a handful of properties that are still unsettled, but the reason that most of them are settled is because we're spending money in the legal line for tax appeals. And again, that's the 22,000 piece. The big piece really is on the regular legal costs, and I think some of you may be aware, just kind of following Branford casually, but there are a couple big legal issues. One is ongoing. One has been resolved. We've been consuming legal resources for, as it relates to the housing authority and the Beacon property. So that's a considerable cost. And also, there was a suit against the town of Branford by lobstermen seeking damages of $2 million. So we had to spend money to defend that. And a judgment came out, I think it was, about 2 weeks ago, Jamie, roughly, on the lobster case. And we actually prevailed. So we actually won there. So, that kind of gives you an idea of the variety of those items. We do typically budget something in contingency for that. It's more than what we did budget, but nonetheless, over the years that I've been here, you can never anticipate what your legal issues are going to be, and obviously the town is, in the vast majority of these cases, the defendant.
So Jim, this is over and above, or would take care of any deductible that we had.
I'm sorry, what was that?
Would take care of any deductible that we had for defending a suit, and we prevailed.
Yes, but like yes, it would. I mean, the deductibles typically are more related to sometimes the settlements. If there's an insurance settlement, so an insurance company represents the town because we have an insurance against the risk that they're suing us for. And in those cases, typically, yes, we will pay the deductible, and the insurance company pays the legal cost. In these type of cases, one of them is, like my understanding of the Beacon issue, which I don't profess to be an expert on, relates probably to land use. I would put it in that category.
Thank you.
Hey, Jim, on the shellfish suit, though, did the town defend it? Did the town contract with a legal firm to defend it? Or did the insurance company defend it?
Well, basically, the town spent about almost $48,000 on that case, Charlie. And again, I don't know all the elements of the case, but I do know that the demand was in excess of $2 million. So on the surface of it, the $48,000 saved us almost $2 million plus. So.
You want to go over the debt service?
Sure. Okay, the debt service. If we go back and we look at essentially when is the debt service budget formulated? It's typically formulated in February and in early March for inclusion in your budget that you make your recommendations to the RTM. At that time, we have a rough idea of a size of an issue, but in terms of the overall projects, that decision usually doesn't get made until about a month before the official statement or bond prospectus is produced. And so the way I get around that is I have a generic line called bond payments interest, which I've been using for the last couple of years. And then when we actually have the issue and the bids come in and we know what our debt service is, then I break those out into the various categories. And, Branford, when I came here, I pretty much stuck to Branford's convention in breaking out debt service by the various categories. Some places just have principal and interest. They have basically, they wouldn't have all the breakdown between clean water funds, sewers, schools, general purpose. But again, that's a convention that's been, which is fine. I mean, in some ways it makes it easier when you're doing your debt limitation schedules. But so essentially all I'm doing is taking what I budget and then putting it into the right buckets once I know what those buckets are.
And the finance and other
Sure, actually,
transfers?
For ease, I combine finance, which is fiscal services, my department, with you guys, the Board of Finance. We had some adjustments to make there. We were taking some money, adding it to actuarial services, and then advertising, and then one of our leases renewed, so it was a small difference. That was the $50. And the $650, we bought a high-capacity shredder in the finance department. And, what you may have noticed at times with transfers with other departments, some of those transfers are made because of, to try to maintain the integrity of the chart of accounts. And so I can't charge some no office supplies for a shredder if I'm asking other departments to do it against equipment. So, so in order to purchase, so I'm purchasing the shredder, basically I needed to create an equipment account, and so that's what that transfer does.
Okay, these are all fiscal 18 transfers.
Yep.
Questions from Jim on these? Additional questions?
Advertising for the Board of Finance, what is that?
Well, basically,
That's posting the budget.
Basically, it's printing and advertising, and that's where we charge your annual report to. So when like Lisa does like an annual report, that's where I get charged to.
Yeah.
I've always considered this board kind of, budget neutral. We don't generate any cost, and we don't bring any income. I see now we do.
We're expensive.
Well, wait a second.
We're an expensive board.
Well, the income,
Yeah.
Okay, other questions? Someone want to move?
I'll move it,
these?
Joe.
Jeff moves.
Second.
Second by Robert. Discussion? All in favor?
Aye.
Okay, number 14 is to consider a request from the finance director to approve a resolution repealing bond authorizations for certain projects. We have a letter from Jim that talks about the various projects. So why don't I read the resolution here, and then Jim can provide an overview. I guess we're going to go with, let me just check here. So resolved, I guess, the Board of recommendation to the RTM that we deauthorize the following projects: the town capital improvements for 2013. We would be reducing that to $260,000. Is that how that's going to work, Jim?
Yep.
So it'll be deauthorized to $260,000, which is a deauthorization of $200,000. I'm sorry, deauthorization of $60,000, correct?
Yeah, actually, there's a lot of moving parts here. You want me to just walk through it?
Yeah, where's it, is there a resolution anywhere?
Yeah, there's a couple things that are actually going on here. If we kind of, take a step back, what we did at a few meetings back as it related to the firehouse, we basically said that, we're going to deauthorize debt for $1 million. Effectively, that's what we did. We basically took money out of a TRB account, so we used $1 million so we wouldn't have to borrow for the firehouse. After our last bond issue, I was looking at the authorized unissued debt, and so I wanted to identify other areas where we could actually deauthorize debt. Bond counsel prepared a resolution, which is included in the letter, and that lists all of the things that are being deauthorized. I asked them to include the Indian Neck Firehouse, because I don't think we did that at the last meeting. We effectively, put revenue into the capital account, but I don't think we took the action of deauthorizing it. So we went back and we looked and we checked that. So what we're essentially doing is we're deauthorizing some projects that had bonds authorized, and we're backfilling that with a transfer from the general fund. And because it is confusing, what I did is, you'll see behind the resolution, there's like a spreadsheet. It starts out with 213 capital projects.
Yep.
Okay, everybody on that page? And so you can see that, okay, so if you look at that top cluster, that makes up $60,000 worth of projects from that original authorization. The 190 went to the community house, so that 190 that's there is getting deauthorized. And in that 2013 authorization was $10,000 in there for issuance costs, which we won't need. So we're deauthorizing 260, but we're only backfilling 60 for the projects that are listed above. Did everybody see that?
I see it.
Okay. And so the action is to deauthorize the projects and fund $60,000 from the general fund. And that's in the letter. The other item, if we go back to the resolution, is 51106, and that's a Board of Ed project. So if you look on my spreadsheet more towards the bottom there, you'll see there was an authorized unissued balance of 51106. That authorized unissued is linked to the actually linked to the Branford High School track. And so basically, by taking 51106 from the general fund, then we don't need to sell 51106 worth of bonds. And then the other item was the restroom trailer. That was a $100,000 authorization. We had issued $30,000 against it, so that left 70. So 70 is going to be used as well, from the general fund. So if you think of the net here, we're deauthorizing 381,106, but because that 200,000 in the middle for the community center and the issuance cost isn't going to be backfilled with general fund dollars, the net transfer out from the general fund is 181,106. Again, there's a lot of moving parts here, and which is probably why I needed to do this spreadsheet to kind of lay that out for you. You can kind of see the sources and uses. And then the question is, well, where does the 181,106 come from to fulfill that general fund transfer into those projects that are needed because stuff got deauthorized? And that's coming out of the principal for the schools, and then it's going to and I separated the transfers out for the BOE facilities and the town facilities. And again, one of the primary reasons we're able to do this is you have to kind of go back to May of 2017, where we had basically built the budget in anticipation of TRB, state cuts. Remember we increased the debt service if we needed to. So there was a lot of different things that were going on there. And just like the $1 million that we used a couple of meetings ago for the firehouse, the overall theme here is that we're basically trying to capitalize on the conservative posture we took, and then we're using it to reduce bonding in the future. So, but because there's a lot of projects related to this, you can see there's a lot of activity in the transfers. but essentially, that's what's happening here. Yes, Charlie?
So I want to ask you just about the restroom trailers.
Yeah.
Because I remember that discussion.
Yeah.
Now, weren't there 2 trailers that we were planning?
No, it was one trailer.
It was 1 trailer. Now, does this mean we only used 30,000?
No. Basically, you had an appropriation and ability to borrow of 100,000.
Yeah.
Okay. You had actually approved a transfer of bond proceeds in the past, so you took 30,000 from the dredging project.
Oh,
Remember, and then that went against the restroom trailer, so that meant you only needed to borrow 70,000 at that time. What you're being asked to consider tonight is to say, okay, we're not going to borrow the 70,000 at all, because we're going to take windfalls from the general fund based on our conservative budgeting in May of 2017 and use that so that the town doesn't have to borrow as much in the future.
okay, fine. I got it.
A lot of moving parts.
Yeah, there's a lot. It's a lot.
For this agenda item, the resolution you want is on the 3rd page, or is there a separate one?
Yeah, the resolution is
Yeah.
on, yeah, there's a,
I don't see a, yeah, it's this one here, so. Section 1, I'll just read it. It's, usually there's something that's a little more descriptive to the resolve that the Board of Finance recommends to the RTM, I guess, deauthorization or resolution repealing bond authorizations for certain projects. Section 1, Town of Branford, the Town of Branford, our representative town meeting has approved the following projects to be undertaken and financed by the issuance of bonds, for which an authorized but unissued bond authorization remains. And I'll go through just the overview here. The town capital projects were authorized but unissued, 260,000. Board of Ed capital accounts, 51,106. Restroom trailer, 70,000. And the Indian Neck Firehouse, 1,500,000. Section 2 of the resolution is it is hereby found and determined that the projects identified in Section 1 are hereby complete and will be funded from other sources. Bonds or notes will not be required to be issued. In Section 3, now therefore it is hereby ordered that the bond authorizations are no longer required, and any remaining unissued bonds, notes, or other obligations of the town authorized to be issued pursuant to the authorizing resolutions are hereby repealed and withdrawn. So that's our resolution to the RTM.
Okay, can I ask you a question now?
Sure.
Because in Section 2, it says, are hereby complete.
Or will be funded from other sources.
right.
That's the
Yeah,
or.
but they're not okay.
It's the or that's.
Yeah, I was just looking at the word complete, meaning it's, they're all done.
Well, they're either all done or they will be done with other monies.
Right.
That's where,
Okay.
that's the,
Right.
That's a clincher.
that's the,
That's the way you go.
okay, other,
All right.
Yeah.
Robert,
I'm ready to move it.
you moved, Robert moved it,
I'll second it.
seconded by Jeff. Discussion? All in favor?
Aye.
Thanks, Jim, on navigating us through that one. And then number 15 is more fund related to the same resolution we just passed, which is actually moving the money. So to consider and if appropriate, approve a request from the finance director to reduce existing debt authorizations and offset some of the reductions through a general fund transfer. So the first one is from principal schools, 181,106, into Board of Ed facilities funds, 51,106, and into municipal funds, facilities fund, 130,000, for 181,106. The corresponding fund transfers are as follows. From bond proceeds, these are all from bond proceeds, counseling center windows, 2,000, police department pitched roof, 1,000, police department exterior stucco, 28,265, town hall boiler, 16,000, town hall generator, 1,000, TS, what's TS?
Transfer station.
Transfer
That's the
station,
transfer station,
overhead
yep.
door, 6735, V&A, building roof, 5,000, and restroom trailer, 70,000, into Counseling center windows, 2,000. Pitched roof for police department, 1,000, and pitched and police department exterior stucco, 28,265. Also into town hall boiler, 16,000. These are transfer ins into the other funds. Town hall generator, 1,000. Town transfer station overhead door, 6735. V&A building roof replacement, 5,000, and restroom trailer, 70,000. So it's out of the general fund bond, not general fund, out of the bond proceeds,
Within that
capital
fund,
accounts
right.
into the
Bond proceeds,
other-
budget's being reduced, the
Right.
transfer ins being increased.
And then you have bond proceeds for Branford High School track and field from, in the amount of $51,106 into the capital fund of Branford High track and field, $51,106. Again, these are all coming from bond proceeds going into, in some cases, the actual capital account. So those are the transfers that Jim needs in order to make everything fit. Somebody want to move them?
I'll move it, Joe.
Moved by Jeff.
Second.
Seconded by Bob. All in favor?
Aye.
Okay. Next is number 16, to consider a request from the First Selectman to fund the purchase of the Zawalla Tabor Drive property. I have a letter here that I'll read from Jamie and Jim, and second from Jim. Then I'm going to turn it over to Jamie for the conversation. I will note that I'm not going to vote on this. I'm going to recuse myself from the vote for potential conflict of interest purposes, so, but I will facilitate the conversation. Dear Mr. Mooney, dear Chairman Mooney, I respectfully request the Board of Finance consider appropriating funds for the Zawalek parcel located at southern end of Tabor Drive. Property is 14.5 acres, zones residential, currently being marketed for sale. Town staff and consultants have evaluated the property and have recommended that the town acquire the parcel. The Planning and Zoning Commission and the Select Committee on Open Space Acquisitions have acted favorably to purchase as well. The Planning and Zoning Commission provided a positive report in response to the CGS 8-24 referral for the proposed purchase, and Select Committee voted to recommend the town acquire the property. The town of Branford engaged a professional real estate appraiser to perform an inspection of the property for purposes of estimating the market value. In the opinion of the appraiser, the market value is $245,000. Therefore, I ask the board to appropriate $245,000 for the purchase of the Zawalek property. Approval by the Board of Selectmen and the representative town meeting per Town Charter Section 73-3 of the Code of the Town of Branford is required to acquire the land. That's a letter from Jamie. Note from Jim is as follows. I am writing to supplement the First Selectman's request for an appropriation to purchase 14.5 acres at the end of Tabor Drive. This property, which is owned by the Zawalek family, is endorsed by the Selectmen's Committee on Open Space Acquisition and received a favorable 8-24 referral review by the P&Z Commission in October 2017. I anticipate the Selectmen will outline the benefits of the purchase. My letter will focus exclusively on the funding requirements and mechanical aspects of the appropriation. Estimated purchase price, $245,000. Other related expenses, $5,000, for a total of $250,000. Funding sources. The revenue source for this project will be derived from a transfer out of the general fund. I propose using the balance of funds previously allocated to cover the anticipated contribution to the Teachers Retirement Board. This was for fiscal 18. Balance of the line item is $377,000 after the board moved $1 million out of the account to augment the pension fund. Required actions. The board fulfills the First Selectman's request for the following actions. If the board fulfills the First Selectman's request, the following actions are required. Create a transfer line item out in the general fund for transfer into the land acquisition fund. Create an appropriation in the land acquisition fund. There's two resolutions here that I will the resolution resolved that the Board of Finance recommends to the RTM an appropriation of $250,000 in the land acquisition fund. This appropriation will be funded through transfer from the general fund. It would be a transfer in at $250,000 into that land acquisition fund, and a line item for expense of land, $250,000. The general fund transfer would be out of retirement Board of Ed, $250,000, and into transfer out acquisition. So that's the mechanics of it. Jamie, you want to take it from here?
Sure, Joe, thank you. So as referenced in the letter, this parcel is 14 and a half acres. It's located east to our ecology park, our landfill that we had closed right at the end of Tabor Drive, and Marshall Road abuts it. The rear parcel of the Zawalik parcel was, for many years, was the town landfill prior to us opening up and closing where Ecology Park is. However, the roughly about 7 to 8 acres is a flat meadow that is zoned residential. There has been, over the years, some interest in developing that parcel for residential, and most recently, there was a interest for industrial use. However, that would require a zone change for that to occur. Given the climate, the uptick in interest in residential development within Branford, I think it would be within the town's best interest to secure this property. This has been considered over quite some time with the town staff, former town engineer, town planner, solid waste director. I believe it was recommended, as I referenced in the letter, that this would be best to be in the town's hands. Therefore, tonight I come to ask for the funding for that. However, the actual acquisition would still require Board of Selectmen and RTM approval per 73-3 of the code, where the agreement to acquire the property would actually receive approval through that process. However, giving discussions with the finance director as laid out in his letter, there's a mechanism in there to fund the purchase of this property, and that's what we're here before you tonight, to fund that account.
Jamie, you had an appraisal done in June of 2017. You went to the P&Z in October,
Yes.
and then the select committee for open space or land acquisition in
Yes, that
April.
was April of this year. And that was this parcel where, because of its proximity to abutting town open space, town property, as well as other open space adjacent to it, this was identified by the Select Committee of Open Space and Acquisition as a property that was, and they recommended that the town, if the opportunity should present itself to acquire, they took up that matter again this past spring, and reaffirmed that recommendation.
Questions, John?
Is this the same property that came up some years ago, where like Public Works thought maybe they could go in there along with making some ball fields, some extra ball for soccer, tennis?
No, that is not the same.
It's not the
property.
same
No,
site?
No, it is not.
Okay.
Robert?
Yeah, given the possibility of environmental contamination from the landfill, I think it would be a great idea to protect the town from further exposure, legal suits, and expenses by acquiring this particular site, and I would support that.
Okay, other questions? Jeff?
Yeah, I just want to, I concur with Bobby's comments too, after I've read the documentation you sent us. It's definitely within the vicinity of the Old Town landfill, and it could, you don't know what the future holds, and I think by protecting ourselves on this purchase would benefit us in the long run.
Is it your intent to support the fact that it would be a residential area up there? Is that what they're trying to accomplish?
Well, it is currently zoned residential, it
Right.
falls in a R3 zone. I'm not in favor of development occurring on that property. I think, but there has been interest in the past as far as development to occur on there. So, is there an identified use for the town at this point? I think it's just best to be in the control of the town so we can make prudent decisions on the property. And I'm just wondering who would maintain this? Would this go to Alex? It would probably be a combination of Public Works and in the rec department. But it wouldn't be identified as a park right now. I'd like to move it, Joe.
Been moved, motion's been moved.
I'll second it.
Bob, seconded by Charlie. Additional discussion or questions from Jamie or Jim? About that, all in favor?
Aye.
Opposed?
Opposed.
So it's 1, 2, 3 to 1. Okay, motion carries. Motion carries. Thank you. And with no other business to come before the board, I'll entertain a motion to adjourn.
I second it.
I'll move it.
Moved and
I'll
seconded.
second it.
All in favor?
Aye.
Very good, thank you.
This program was brought to you in part through the support of the Town of Branford. Watch town meetings and other videos on demand at BranfordTV.org.